In this video, we're going to be talking about the hidden costs of raising capital and how you can avoid them so you can save a bunch of time and a whole lot of money in the process. If you like the video, like, subscribe, and share for more content just like this. As you proceed through a capital raising process, there's one thing you start to notice very quickly. It chews up a significant amount of your time. In fact, if you speak to most investment groups, they will tell you that when they actually take a company through their DD process, they are expecting that it's going to have an impact on the business. In fact, in my own journey, when I went through a capital raising with an institutional investor, what happened was we spent that much time in the process that after they invested into the company, my first meeting with them was actually letting them know that there'd actually been a decline in the business since they had become an investor. Now, when I was freaking out about having that meeting, because obviously no founder likes to talk about, non-improved performance, let's say, the first reply that they had was surprise me, and it helped me realize completely normal. So after I let them know, their question was that because of us? And I was like, wow. And I was like, yes, it was. Because the reality was I was going through the process and it just consumed so much of my time that basically, because of all the different people you're dealing with. So when that process was done, I was like, that's it. I'd never want to go through a process that consumes that much of my time going forward. So here's some simple areas that you can make sure that your time is saved in this process, and also that you don't end up spending a huge amount on those hidden costs. So the first one is when you go in this process, opportunity cost. Opportunity cost is the biggest cost that you'll have in your capital raising. This can come in the form of revenue or in the form of missed strategic opportunities. So to give you some context, when you're going through this process, if you were to actually calculate the value of your time as you're going through a capital raise, you will realize how much you're actually spending on this process. And how you can do that is really simple. Think about how much value you want to add to your company over the next 12 months, right? Think about the value. Think about, is it 5 million, 10 million, 3 million, 20 million, whatever it is. Think about the value you're looking to add. Then divide that by 52, right? Then divide that by a weekly amount, right? Now, as founders, we could spend probably 60 hours a week, right? If you're taking it easy as a founder, maybe 40. If you're an aggressive, could be 110. Who knows, right? Depends on how aggressive you are. But if you break that down, you will figure out an hourly cost for your time. Most people, when they're going through a capital raise, they will spend 2 to 4 weeks, right, in capital raising mode during the course of a year. That's 2 to 4 weeks that you are not selling, that you are not involved in any strategic discussions, that you're not involved in any of the potential opportunities which could add actual either revenue value or strategic value to your business. Now, of course, capital raising is important, but you need to factor this in mind. So simple tip for you, when you're actually going to a capital raise, I highly recommend every time you get the same question more than once, document it, right? Document the question and document the answer. What it will help you do is help you create a list of frequently asked questions that you can then use with every investor going forward. So in our platform, Chris, we've actually got a frequently asked question management tool. Right? And what it does is it basically you can set up all the frequently asked questions in that, and it will mean that the investor can read through all the questions before you even have your first discussion with them. What that means for them is they get all the answers to the questions before they even speak to you, right? Or to a lot of them, to at least 80 and 90% in most cases. From your perspective, it means you're not answering the exact same questions over and over again. And when you think about that, for you, what that means is that you are saving that time to be focusing on more productive things in your business, which could be HR related, sales related, tech development related, all that are super important. The other part is when you're creating your actual presentation deck. This is a simple one. I know from myself, I didn't really quite know the structure that I needed to create my pitch deck with, right? I went online, took all different advice, and everyone had different opinions on how to do it. What I ended up with was a pitch deck, which actually wasn't really useful at all, right? So what I found was an exact specific structure that I knew was relevant for the types of investors that we're going to be attracting, and I copied it. The reason that saved me so much time is because What it meant was I wasn't going trying to get advice from everyone about how I should create my pitch deck, what I should have, what was important, what wasn't important. Utilize sample pitch decks that are already online. Said find one that matches the stage which you're at, whether it be seed, Series A, Series B. Simplify it. The more accurate your pitch deck, the more it's going to save you, number one, questions. It's going to save you time. It's going to make it more efficient for you raising money. In fact, in my case, we went from a conversion rate of getting one investor for every 11 investors down to 1 in 4 and 1 in 5. That is powerful when you are raising money. You want to try and think how you can become more efficient in every way. So going back, 2 key areas. 1, make sure your pitch deck is accurate. Utilize an existing template online that's relevant for the stage that you're at. 2, every time you get a question, create a frequently asked question list and make sure you answer that question. The most beautiful thing in the world is when you answer one question once and you don't have to answer that question over again because it becomes part of your process. I hope that was helpful. I hope you really understand how much time you actually spend, how much cost you're actually spending in this process of raising money if you do not do it efficiently. Like the video, share it, and please look out for more content coming from us around the efficiency and how you can actually raise more money from doing less.